So it looks like a government shutdown is going to happen. And frankly, what does that really mean for interest rates? What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with another episode of the Daily Dose. Thanks for joining, and make sure you hit that subscription button so you never miss a beat. Just a little refresher, the Daily Dose is a quick 2-3 minutes. What happened today in the marketplace, how it affected interest rates, and what can we expect for the next coming days. So today, the big news was really the government shutdown. You had Trump out there on Capitol Hill. It looks like coming out of that meeting, they are not going to make headway. As I said this morning in my week ahead, to me, this is the biggest thing because I believe it has the potential to make the most impact. The longer it goes, the more uncertainty looms. I think it's a bad thing for the real estate space, but I think the longer it goes, could be a strong positive for interest rates. In times of uncertainty, people will gravitate towards treasuries. The mixed thing I have is I don't know how much of a draw that's going to be, given that we are at the new norm, like I've been talking about, of 3% inflation. So you have that sitting there. And should we get government at some level of compromise, how much is that going to add to the federal deficit? Again, another inflationary number. And with the government shutdown past Wednesday, we do not get the release of the data that we really need. The non-farm payrolls, the initial jobless claims, the real meat that the market is sitting on to determine how poor is the economy. What state is the economy really in? Is it really in a poor state? Or is the labor market, was it just a little bump in the road? It's already corrected itself, whatever you call it, seasonal or whatever, it's already back. And the economy and the labor market is not the major concern. And we're not going to get that information should this shutdown happen. So that's really the big news. And what we saw today is we saw an initial reaction of, we had rates going down and then we had them go up a little bit, and they kind of really honestly moved fairly sideways to slightly lower. It was a slow roll downhill today, not much movement in pricing, and we're just kind of going to be sitting and waiting, in my opinion, for those numbers. You're going to see reactions, though, and volatility from any news you're going to get on either side. You got jolts tomorrow, and then you have ADP on Wednesday. It typically doesn't carry a ton of weight, and it's been way off previously, but should we get that shutdown, it has the potential to have some volatility to interest rates. So buckle up, y'all. Fingers crossed we get something that's meaningful that we can hang our hat on and make decisions. Talk to you tomorrow. Cheers.